Welcome to NFM Market Perspectives.
Hey everyone, welcome back to Anafram Market Perspectives. It's Friday, and that means it's time to wrap up the week and take a closer look at how the markets performed. Here's what we're covering today. First, we'll start with a full S&P 500 performance review. We'll see who came out on top, who struggled, and what key trends shaped the market this week. Then we'll break down the impact of interest rates, inflation updates, and major financial events. Did things play out as expected, or did we see any surprises? And of course, we'll check back on our Monday stock observations. How did they perform? Were there any key takeaways we should keep in mind? Now, just a quick reminder. This isn't financial advice. We're here to help you understand the market so you can make informed decisions for yourself. And before we dive in, we want to hear from you. Got a stock or a topic you'd like us to watch for next week? Drop your thoughts in the comments. We'd love to know what's on your radar. If you're enjoying these insights, hit that subscribe button and share this with others. Now let's get into what happened this week. This week, the S&P 500 dropped nearly 3% as investors navigated interest rate uncertainty, rising volatility, and geopolitical risks. While semiconductors surged, big tech, financials, and healthcare sectors saw steep declines. The VYX rose from 22.65 to 24.25, indicating heightened market anxiety. S&P 500 one-week performance. Who gained, who lost? Market winners, semiconductors, and precious metals. Shine, semiconductors. Outperforming Nvidia gained 6.12% as AI-driven growth reinforced its dominance in the sector. Broadcom rose 7.02%, supported by strong demand for networking and AI infrastructure. AMD increased 2.41%, benefiting from AI momentum despite broader market headwinds. Precious metals and mining, benefiting from volatility. Franco-Nevada climbed 3.26%, with gold prices providing a safe haven boost. Agnico Eagle Mines advanced 2.81%, as geopolitical concerns lifted demand for gold stocks. Retail and consumer resilience Dollar General added 1.68% as discount retailers benefited from shifting consumer spending. Dick's Sporting Goods rose 3.62% after reporting better than expected earnings. Key takeaway, semiconductors were the standout sector, while gold stocks and discount retailers gained amid economic uncertainty. Market losers, big tech, financials, and healthcare under pressure. Big tech and consumer electronics sell-off Apple fell 9.84%, pressured by weakening demand and regulatory concerns. Microsoft dropped 4.27% despite AI advancements, as broader tech weakness weighed on the stock. Tesla declined 8.59%, facing concerns over slowing electric vehicle demand and increased competition. Financials decline on rate, uncertainty. JP Morgan lost 8.43% as economic slowdown fears and bond market volatility pressured the sector. Goldman Sachs dropped 7.02% on concerns over investment banking revenue. Healthcare and biotech underperformed. Eli Lilly fell 11.64% as valuation concerns led to sharp declines despite strong long-term growth prospects. BioNTech declined 5.72%, due to lower COVID-19 vaccine sales. Key takeaway, technology, finance, and healthcare faced major selling pressure, with investors rotating into more defensive plays. Trump's tariffs, trade war escalation. The new 25% tariffs on Mexico and Canada have intensified supply chain fears, impacting semiconductors, auto manufacturers, and industrials. Global reactions. Canada imposed tariffs on U.S. products, including computers, sports equipment, and metals. The European Union expanded tariffs beyond steel and aluminum to include textiles, home appliances, and agricultural goods. Mexico is holding off on retaliation until April 2nd. Australia criticized the tariffs, stating that costs would ultimately be passed to U.S. consumers. Key takeaway, the trade war is escalating, adding uncertainty to global markets, particularly affecting the technology and consumer sectors. Economic data. Recap, what's moving the markets? This week's data indicated slowing growth but persistent inflation, keeping the Federal Reserve and Bank of Canada on hold for now. Top 3 market-moving indicators: U.S. CPI inflation, year over year, 2.8%, lower than expected, previous 3.0%. Inflation is cooling but remains above target, keeping rate cut expectations uncertain. JOLTS, job openings, 7.74 million, above forecast previous 7.508 million. Job market remains tight despite economic slowdown concerns. Canada interest rate, decision 2.75%, cut from previous 3.00%. The Bank of Canada lowered rates by 25 basis points, reflecting concerns over slowing economic growth, though inflation risks remain. Other key data: U.S. Producer Price Index, PPI, 0.0%, below forecast, previous 0.6%, suggesting easing price pressures. Canada building permits, month over month, minus 3.2%, better than forecast but still declining, reflecting a slowdown in construction activity. Key takeaway: the economy is slowing, but inflation remains too high for immediate rate cuts, keeping market volatility elevated. Bonus section: ETF and stock technical insights. ETF to watch: Invesco, QQQ, Tech Rebound. Technical analysis: Ichimoku Cloud and MACD. The ETF is rebounding after dipping into the cloud, signaling renewed bullish momentum. The MACD indicator is nearing a bullish crossover, which could indicate further upside potential. Key takeaway: if the market stabilizes, QQQ should recover, particularly if AI stocks hold key support levels. Stock 1. Oracle, Cloud and AI Strength. Earnings report. Earnings per share, $1.47, missed forecast of $1.49. Revenue, $14.13 billion, missed forecast of $14.39 billion. Technical analysis: the stock is trading below the Ichimoku Cloud, signaling bearish momentum. The MACD remains negative, suggesting further downside unless sentiment improves. Key takeaway: concerns over slowing cloud growth are keeping Oracle under pressure. Stock 2. Adobe, AI and software demand. Earnings report. Earnings per share, $5.08, beat forecast of $4.97. Revenue, $5.71 billion, beat forecast of $5.66 billion. Technical analysis: the stock retraced below $380 and is now finding support in the Ichimoku Cloud. The MACD indicator turned negative, suggesting short-term weakness. Key takeaway: strong AI-driven growth supports Adobe's long-term outlook, but valuation risks remain. The VIX index. Volatility is back. The VIX surged from 22.65 to 24.25, signaling increasing market uncertainty. If the index rises above 25, more aggressive selling is likely. If it drops below 20, markets could stabilize. Key takeaway: rising volatility suggests traders should prepare for a choppier market ahead. What's next? The semiconductor sector remains bullish. Big tech, financials, and healthcare are under pressure. The Federal Reserve is unlikely to cut rates soon, maintaining uncertainty. Trade war escalation adds risk to the global market outlook. The VIX is rising, signaling the potential for further volatility. See you Monday for our following market preview.
Thanks for watching. If you found this valuable, hit subscribe and share this with others. See you next time on Anna Market Perspectives. Next time on Anna Market Perspectives.